Welcome back to Making Money Matter, ladies and gentlemen. My name is Kerry Stevenson. I'm your host, and today I've asked Ron Heeks. He's the managing director of Larvotto Resources. That's Larvotto, Larvotto Resources. The ASX code is LRV. Now, Larvotto's only been around for about 2.5 years. I'm sure Ron's going to interject if I'm wrong there. Market cap of about just over 100 mil. They are developed. The reason I wanted to get Ron on today is they're developing one of Australia's higher grade gold mines. And you all know me, that gold lady. Now, the mineral resource, about 1.7 million ounces, it's gold equivalent. Now, what does that mean? It means they've got gold and they've got something else, which is called antimony. Now, you might say, well, what the hell's antimony? All you need to know, ladies and gentlemen, is it is used in solar panels. We're getting into this electric revolution. Solar panels, there's going to be millions of them. It's now, antimony has become a critical mineral and it's getting pretty exciting. Hillgrove, New South Wales, that's the project. The antimony price has doubled since they bought this project in November of last year. So exciting times, Ron. Thanks for joining me today.
Thanks, Kerry. Great to be here, and thanks for the opportunity to talk about the project.
Well, I know you're excited about it. I'm not sure if I said this, but we had the Australian Gold Conference, which you presented at in August last year. Now, August this year, your share price was 14 cents. And as I speak to you today, it's about 34 cents. So, ladies and gentlemen, if you're at the Gold Conference and you liked what Ron said, you'd be smiling today. Just wanted to put that out there, Ron.
Thanks, Kerry. Yeah, no, it's been a great run. It corresponded with us releasing our pre-feasibility study in our initial reserve. So we've got 600,000 ounces of gold equivalent in our initial reserve from the 1.7 million ounces. And we look forward to increasing that in the near term as we look at some of the other areas. We're just focused on the Mets area at the moment at Hillgrove. It's a gold antimony project. The value is about equal. In fact, antimony is a little bit ahead at the moment, but nice grade. So it's 6 grams it's recovered with mining dilution applied. So it's a very nice grade. And as I say, we get about equal money in from the antimony and the gold, both of which are at absolute record prices at the moment. When we acquired the project in November 23, antimony was trading at $9,000 a tonne. Last weekend it hit $30,000 a tonne in Rotterdam, and of course everybody knows the gold price, and that's gone up quite nicely as well. So we're bringing on a near-term project we should be producing within the next 12, 14 months.
Oh, wow.
At record prices. So if you're doing gold and antimony, there is no better time.
Talk to us about you picked this project up. Now, the Hillgrove project, how'd you get your hands on it, and why did you like it so much?
The project was in administration, and through no fault of the projects, the company that had it beforehand had a great plan to put it back into production and would be doing so now very, very profitably, but had a catastrophic failure at one of their other operations, and that put them into dire cash straits. So they just didn't get there. They ran out of money before they could bring the project on, and it got caught up in the whole company collapse. It was a very long and involved process to buy it out of an administration. It was it was quite heated. There was a lot of companies involved. But at the end of the day, we thought it was well worth the battle, and we got there at the end and picked up the project last year. And then, as we say, both the gold price and the antimony price has gone up. But the deal that we did was it was a good deal in hindsight. And we have a plant with a replacement value of well over $150 million on site.
Wow.
We have $150 million worth of underground workings ready to go, development ready. All we need to do is start mining in some areas. So all of this makes moving into production a very, very simple exercise for us, massively de-risked, and we're moving on that as fast as we possibly can. But it also has spectacular exploration upside, and some of our early drilling that we did earlier this year, our best hit was 30 meters at 2 ounces, which is a spectacular hit. I think we won drill hole of the month or whatever it was at that point. But it shows that at depth this system is very similar to Fosterfield and Southern Cross Gold's project in Victoria as well.
Wow.
So, but near-term production. So we will be starting to produce at the time when both these commodities are at record prices.
Ron, I like numbers a little bit, especially when they're in your favor. You said two things. You said the plant itself was worth about 150 mil. Then the underground workings, about another 150 there. Your market cap at the moment is 100 mil. What I'm looking to understand is the value proposition around what you're doing. I mean, production, you're saying you could get into production in 2026. I'm talking to you in October 24. That's not very far away.
No, it's not far at all, and that's because of the assets that we've got on site. And this plant has produced before. We produced an antimony concentrate, a gold concentrate, and gold bars. So it's done all this before.
Okay.
We're looking at tweaking the circuit. We're making it a little bit bigger to optimize everything. And we're taking the time to do a lot of metallurgy to make sure we get that right. But we're not doing anything here that this plant hasn't done before. It has sold and produced. Historically, the area has produced gold since the 1880s. So it has a huge history of that. It produced an antimony concentrate for 30 years, up until 2005 when the price went quite low and was put on care and maintenance. Since then, there's been a whole new plant built. So it's operated as a gold project. It's operated as an antimony project. Our predecessors who never got there were the first ones to say, let's run it as gold and an antimony process, which makes sense. You get them both at the same time, so why throw one away? Which was what was happening.
So let me just interrupt you for a second, because I don't understand it. And if I don't understand it, my audience won't. Gold and antimony and processing it at the same time, is that difficult, or do you put it through the plant at the same time? How does that work? Talk to me like a 5-year-old.
Sure. All goes into the plant at the same time.
Yep.
It's a conventional flotation plant, so you add chemicals and the antimony and the gold floats into a concentrate. And you sell the concentrate. So it's exactly the same way as most copper plants work, lead zinc plants work, and a few gold plants around the world as well. So nothing unusual about it, any way, shape, or form. Okay. But it's just that you get both. And back in the day when they were just treating antimony, they weren't taking the gold. So the tails dam from that era runs 1.6 grams. Which is higher than West Australian ore bodies, right? So they had no interest. So that was just went out to tails. So we will take the gold and the antimony. And, if it worked successfully as a gold mine and it works successfully as an antimony mine, and you're taking both, then one should be paying for the other. And when you look at the project financials at current spot prices, the all-in sustaining cost for gold is negative. So we actually get the gold component for free. So the antimony is paying all costs.
This is quite, I'm sitting here thinking, I think you've flown, I know you presented at the gold conference, but of course I was running around like a chook with my head cut off. So I didn't listen intently, Ron. But it seems to me, if the antimony pays for the gold, and by the way, ladies and gentlemen, right now, the Australian dollar gold price is about 33,800 an ounce. Talk to us about what you're looking at as you get into production early in 2026 in terms of that production.
We'll produce about 80,000 ounces of gold equivalent a year. And we talk ounces because everybody understands what that means. That's about 40,000 ounces of gold and 5,500 tons of antimony. Now that 5,500 tons of antimony at the moment is worth more than the gold, but that gives us about 7% of world supply. Given that this is the largest antimony project in Australia and the 8th largest in the world, we will supply 7% of the world supply at the moment. So that is a globally significant deposit by any measure, albeit not huge, but globally significant.
Do you already have people wanting to take that concentrate at the moment? Are you being
Absolutely. Yeah,
courted?
absolutely. Absolutely. Including a lot of people who want to take it but don't know what to do with it because they just know that they want it. And I'm talking at government level. Um,
Oh,
so, what has happened in the last couple of weeks is that China, who refines most of the world's antimony, has banned the export
yep.
of antimony for national security reasons. So all those people that use the antimony that they produce, that's the solar panel providers. Every solar panel has about 40 grams of antimony in there. It makes them considerably more efficient, so it's a pretty essential item to have in there. It makes the glass work better, so you get the UV rays that you want, and it increases the efficiency. But there's about $1 worth of antimony in a solar panel. So if the antimony price went up tenfold from the $30,000 a ton it's at now, it would mean that there was $10 of antimony in a solar panel.
Right.
It's not like lithium, where if lithium doubles, the price of an electric car gets to the point where you can't afford it because it's so much of the cost. So wherever lithium is used, wherever antimony is used, the amount of antimony in the product isn't actually financially relatable to the
Got it.
picture. Such small quantities are used, but at the source, it makes it worth a lot more.
Is
Uh,
it,
and
sorry to interrupt you. You,
uh,
you, you said solar panels. Is it used in any other applications?
it's always been used as a metal hardener, and it's always been used as a fire retardant. So for historical days, fire retardants, and that use is increasing, especially in paneling since the Grenfell fire in the UK
Mm,
that destroyed the apartment block.
mm,
A lot of panels now have to have antimony in them to stop that happening on multi-story buildings, and a lot of the world is enforcing that. So that's an increasing use, which we really don't understand how much will go into that. The solar panel use is increasing sort of 20% year on year at the moment. I think the one thing we can agree is that solar panel usage won't go backwards,
no.
not in the short term. Um, it has always been used in lead acid batteries to harden the lead within the battery, and again, only a very small amount. But that market is still as big as what it was because even electric cars have a lead acid battery in them.
Yeah.
So that's a huge market. And then there's the military uses, and it's used extensively by the military. And militaries around the world at the moment are using a lot of lead, and the antimony is used as a hardener within that. So there is an extreme shortage.
Wow.
And countries such as America do not produce their own antimony. So China banning the trade has caused all
Like,
sorts of grief all
mhm.
around the world from
Oh,
various places.
I want to get into, so thanks for that explanation. So hopefully all of you out there now understand antimony, and it sounds like it's a market that's not going to go away. It's just increasing. Um, we're going to get into the exploration potential, but what I know you've done a PFS, which is a pre-feasibility study, and ladies and gentlemen, that just means it's the economics around the project. Can you just talk to us briefly about that PFS? And then the next one will be a DFS. So just explain to our audience what that's given you, what's that shown you, and why it gives you, I guess, confidence going forward.
The PFS has come up with some excellent numbers on net present value of the project, operating costs, what it's going to cost to put the project into production. Because so much of our plant is already on site and the underground workings are already on site, our PFS is so close to a definitive feasibility study that it's not funny because it's all there. We're not building roads, we're not building camps, we're not building airports. We have most of the infrastructure there already. So it will cost us about 80 million to get back into production.
Oh,
And
wow.
and half of that is actually capital to build up stockpiles. So it's pre-mining. So it's not that we're building anything, it's that we're starting to mine and building up stockpiles so that we've got sufficient stockpiles when we start. The actual cost to spend on the plant is only about 20 million. and there's about 20 million on tailings facilities. So, and the rest of that is actual mining. So, and while we're doing some of that, we're actually starting the plant and making a bit of money on the way through. So it's an unbelievably de-risked project that's supplying a market shortfall. And certainly on the antimony side, there is nobody within years of coming back into production. So we're in an unbelievably sweet spot. And by any metric, if you look at the only other companies that are close to us,
Yeah, that's what I
we
was
are,
asking.
incredibly undervalued. As a managing director, I have to say that. But the only other project that is even close to us is Perpetua Resources in the US. It's a TSX listed company.
Right.
It's a market cap of 800 million. It has
Wow.
an antimony resource smaller than ours. The grade is 0.06% antimony, and we're at 1.5. So orders of magnitude higher. To produce what we will produce, they have to build a $1.2 billion US plant and mine 8 million tons of ore per annum. We only have to mine 500,000. So arguably they've got a way to go, whereas we're sitting there ready to go now.
I'm kind of scratching my head a little bit here, Ron. What do you think people are missing? I said right at the start, your market cap's just over 100 mil, yet the plant alone's worth 150. I'm trying to break it down into simplistic opportunity, if you like. And by the way, ladies and gentlemen, not financial advice. After this, go call Ron up and annoy him a little bit more and ask you questions. Or if you like, put the question down below in the comments section. I promise you, I'll get Ron to answer it. How's that? But as I just said, your market cap's just over 100 mil. What's the market missing?
Well, I think we haven't had the project for long. We've only had the project for realistically 9 months.
Yeah.
Since it was inked. It's very difficult to talk about. Well, we're not allowed to talk about project economics until we release a pre-feasibility in our reserves, and they only came out about 6-7 weeks ago now. So we haven't been able to say much about the project, and that's just ASX rules that until you've got a reserve, you can't quote any economics. So we've been promoting the economics of this project for about 7 weeks, and everybody else has been doing it for a year plus.
Okay.
So we're the new kids on the block. We're dealing in a metal that a lot of people don't know. They know it's a critical metal, but that's all they know. They don't realize that it gets, it's one of the main things that makes a solar panel efficient and this, that, and the other. And really the awareness of everything was created when China banned it, and then everybody thought, "Oh, what does this mean? Let's have a look." So it's quite interesting. I think I saw a stat the other day that there was 6 companies in Australia that listed that they had antimony about 2 months ago, and now there's 36 companies.
Oh, is that right?
That have listed that they've got antimony, but nobody's got one ready to go.
Yeah, and there's no issues around this, is there? Because I know, recently we've had the government step in and stop the Regis Resources project, but you've got the mining license.
We're on mining licenses. We do have to get some more permitting.
Right.
Unfortunately, during the administration process, some of the permits expired, and there was nothing that we could do about those. And we're in the process of re-permitting those. But unlike, say, Regis, as you mentioned, which is a greenfields project that's never been there before, our infrastructure is already there and built. And this mine has operated for 100 years. So there's nothing new happening here. So we see it as a normal course of business. In New South Wales, unfortunately, it's a convoluted normal source of business, but that's what it is, and we're used to dealing with every state's got its different ways of doing things, so it's just one more for us. But the history is that in 23 it was running.
Yeah, absolutely. Now, before we run out of time, you've done the PFS. You said it's almost a DFS. Are you getting on with the DFS at the moment?
DFS is flat out. We appointed MIQM, which is a subsidiary of TEAS, and that was announced yesterday, I think, who are running the DFS. They're an excellent team run by Jeff Jones, who used to run GR Engineering, arguably one of the best on the planet at doing this. So it's great to have them on the team. We would expect to have this finished very, very early next year. Because it's not a big job. Normally it would be
Yeah.
taking people 12 plus months to do this, and we're sort of talking a quarter realistically to get it there. Permitting is all in process. All the studies that one needs and everything is all in process. We're very lucky that we've got the significant part of the team on site, which was again a very lucky thing for us, and hangover from our predecessors who had those people there to put it back into production. So we've got them. So, they've got over 2 years now experience with the mine, which is a great thing when you're starting up. So it's a pretty simplistic process, although nothing about mining is simplistic. But it compared to everybody else, we're in a very, very lucky position, and we just need to get the awareness of what this means. We've released some wonderful exploration result. We've got a drill rig on site at the moment. We've got another 2 turning up in a couple of weeks. We've just got the permit to do that. So there'll be an ongoing flow of results out, and if they're anywhere near as good as what we've already put out this year, it'll excite a fair bit of interest, I think.
Okay, my last question before we do a wrap up. You mentioned Fosterfield before. I said right at the start, this is 1.7 million ounces, gold equivalent. With this exploration, do you think this can get a hell of a lot bigger?
Oh, absolutely. Very little doubt. I mean, we've got a 7-year mine life with our current reserve. That's only touching less than half of the resource, and we'll start converting the rest of that resource in the near term. That's before we drill another hole. The exploration hits that 30 meters of 2 ounces that we hit earlier this year. It isn't in our resource. It isn't even in our exploration target, and we have a 1 million ounce exploration target, and that is only for material that's directly below the current areas of work. And only extract and only pushed down to the lowest level of the current working. So we haven't even pushed it deeper than that. So there's a lot of potential here. We'll be here for 20 years. Well, the mine will be there for 20 years. I probably won't be.
I love it.
The mine will be there for 20 years.
Ron, I want to it's actually probably one of the most exciting projects that I've listened to for quite a long time. And I really do think you've flown under the radar. So come back on a regular basis so we can, because I think there's a lot of news flow coming as we go forward. And as I said before, production in early 2026. Guys, that's going to come around in a nanosecond. But give us 3 reasons why you think people should sit up and take notice. I think we've listed about 25, but I'm only going to give you 3.
Well, you're with the highest pricing for both commodities. We're near term. It's done it all before, and it's a world quality project. On the antimony side, it's not the world's largest gold mine, but it's certainly Australia's largest antimony mine. And at 30,000 US a ton, at 68 cents, do the math. It's pretty good. So
and
we
not
look
that
forward
many
to getting it
shares,
there.
and not that many shares on issue under Larvotto. I think just over 300 million. Is that correct?
Yeah, no, we're pretty tight.
Yeah.
So we've had some great support since we put this project in, and the people that came in at our last raise at 10 cents are very happy, and it's wonderful to have happy shareholders. That's a very pleasant experience. And we look forward to, adding to that in the near term. There's a lot of news coming out in the near term. We've had a bit of a quiet patch from releasing a lot of news, but we've got a lot on and we've got a small team. So there'll be a lot of news coming out in the near term, and that'll help build things up. But I urge people to have a good look at it and have a look at the projects that are metrics around. We just need to increase awareness of the project.
100%. All right, Ron. Thank you so much for joining me on Making Money Matter, and come back and give us an update very soon.
Thanks, Kerry. Appreciate it.